What's going on, everyone, and welcome back to another episode of Friends of Mortgage Heroes. My name's Brian.
I'm Will.
And today we have a credit corner in the house, none other than Rod Prado. Welcome in, brother.
Hello, guys.
How are we doing today?
Good, man.
Happy Friday, TGIF.
Yeah, I know. What a wonderful day.
Isn't that a truth?
You know, one of the things I like to do is I wanted to bring Rod because I think it's so important to have an industry expert when it comes to credit repair.
Of course.
How important is it, Brian, when we actually get people and we're qualifying for a mortgage and boom, we get all this debt, these medical, these collections, and then their credit scores are just, we can't do it. It almost feels like a dream killer.
It's so refreshing when we're able to understand what's happening, but at the same time, you know, we specialize in mortgages. When there's things that are far beyond that reach, you know, that's why we have professionals that are able to cater to clients' needs, know exactly what they need in order to be able to get their credit up to par.
Yeah.
But on the contrary, a lot of people have a misconception on what credit does, how it helps you, and how important it really is. So with that being said, Rod, please tell us a little bit about, you know, how you got started in an industry, who you are, what you do, and just a little bit about bio.
Thank you for inviting me, guys. So I'm very glad to be here.
Thank you.
Absolutely, what you said is nothing but the absolute truth. Credit is very important, an asset for most people that gets disregarded for most of their lives until the day comes when they actually need it. Yeah. Which is, you know what, I just graduated from high school and then I want to move out of the house of, damn, I can't qualify for anything. I should have done something with my years of youth, and they still don't.
Yeah.
So believe me, I was that guy. You know, for a couple of years.
We all?
I started working like about 20-something years ago. Mortgages, as a matter of fact. Well, everybody
really?
was at the time, you know, like fresh out of high school, everybody and their mamas and your gardener was also a loan officer, you know?
Yeah.
So we started doing loans. I was the only Spanish speaker for this company. And we did great. Everybody was closing like 50 loans a month and whatnot. You know,
wow.
that was the standard back then when the loans were falling out of the sky and money was raining on everyone too.
Well, I'm glad that you were actually in our field too, because that kind of gives you a little bit of the pain that we went through.
More so than an expert, I guess I would call myself a credit corner itself, because that's us. Very experienced in very diverse realms of the industries. I've been doing these. We were doing loans back then.
Well, you're saying back then. How long ago was back then?
Don't give out his age.
Back then, 41 years old now.
Oh wow!
So fresh out of high school, I started doing all this, and then nearing the 2008 era, when everything started sort of slowing down.
Gotcha.
I realized that basically it just started getting tougher. You know, like it started getting super easy to hand out loans, and then it wasn't. Then nobody qualified. And everything completely crashed. Well, as I was basically getting started with all that, I found out that a lot of our book of clients was losing their homes.
Wow. So this was like back in 2008, then more or less.
That was option arm stuff. And a lot of our clients were losing their homes, were basically loans that one point or another, we were placing them in these loans because that's what we were taught to do, you know?
Got it.
And as that happened, then you realize that, well, they needed to basically be placed somewhere, or their family members and whatnot, and they have crappy credit.
Yeah.
My office at that time was a whole floor in a building, and it was at the very, very end of the whole building. And they started calling my office the credit corner.
Credit corner, because it was in the corner. Almost kind of like a Starbucks, right? They do that purposely.
So they started to go, you want to send it to Rod in the back end?
He's in the corner.
Because what he's doing, or what I figured I thought I would do, I have to be more diverse, because if you do qualify for a loan, and what most people do in most other offices is 1 out of 5 clients, well, it's probably more like 3 out of 5 clients at this point, have kind of like a questionable credit at this point.
Gotcha.
And most people, they just don't delve into it, or they just want to deal with those clients and go like, hey, you know what, Brian, go back and fix your stuff and come back when you're ready, you know, or pay your debt, and when you're ready and your credit's up, you know, come give me a call. Here's my card.
Yeah.
I'm sorry to cut you off.
And I didn't want to turn him away because you know, nobody wants to turn him away in that regard. So we started basically fixing their credit. It took a while, and it was kind of like a learning curve basically since then.
And when you're talking about fixing credit, what are some of the things that you see that happen more often?
We started with the proverbial, just kind of like sending just the regular dispute templates and whatnot, and you know what everybody thinks of credit is.
Yeah,
it's
exactly.
Pretty crappy, rocky, and non-efficient. And that's the experience that most people have with most credit agencies.
Gotcha.
But as we basically continue moving forward, we realize that we need to be more efficient.
Okay.
So we moved away completely from doing loans, and I moved out of that, basically seeing like, oh, you know what, loans is not for me at this moment, and I stuck to the credit repair, and I figured out I gotta get more educated about the matter.
Nice.
So my father, basically, he has his stuff kind of like parked at that point with what was Merrill Lynch. Merrill Lynch had his personal financial advisor, and I became his junior advisor.
Wow.
For Merrill Lynch, and it was for like a year or so. I was kind of like the guy fetching coffee, you know. But,
Yeah, you have to start somewhere.
but the beautiful part about it is that it teaches you the very basics.
Yeah.
You get your licenses and whatnot. And one of the most proverbial things and more important things that I learned, and I think it resonates with everyone, is that the most important things about prospering anywhere is starting from
Ground up.
ground up.
We got to learn how to take the
And
trash
step
out, right?
one for financial success, not just for building wealth, is get rid of your debt.
Absolutely.
So-
That's the number one step. You want to float and soar, first get rid of the cinder blocks that are hindering you and holding you down underwater.
I like that analogy.
And that's what we do. That's what we do with Credit Corner. What they were kind of like preaching at Merrill Lynch, well, not to get like anything, was that we need to get rid of your debt and basically manage your finances so that we can basically allocate some of your savings into now investments and so on. But you're talking about scales of people that are making millions of dollars.
Yeah,
right?
yeah.
They really don't like anyone making less than $500,000, or if you
Wow.
make any less than $500,000, basically of investing it with them, they send you they offshore to like Uruguay to like their call center, basically.
Got it.
And
So-
that's true. That's where they wanted to send me. And before they sent me there, I went, you know what? I'm not for Uruguay. I'm sorry, guys. I'm gonna stay here. So, and they told me that that time it was already 2008 or so, and I was still doing credit. And they told me, you know what? You maybe best be placed if you basically move for like a retail bank.
Got it.
So I started working on the side with Wells Fargo too.
Whoa.
Okay.
And then I moved with a private bank with Wells Fargo. And with Wells Fargo, they're a little more conservative than Merrill Lynch. And all those private investment
Yeah, they
banks.
take everybody.
Yeah.
Yeah.
Yeah, you
So
could open up a
everybody-
bank account with $10. You're
you
good.
got $5, $10, you want investment? Yeah, I got a CD for you, And so it's a very, very more passive, kind of like earning, vehicles, but still, they were still in the right kind of like a road track for the success in the matters of with Wells Fargo. I learned a lot. It's like a university of structure.
Gotcha. Got it.
And they're amazing at what they do, except for the other aspects. But what's important is that you learn how to deal with little John Doe and everybody from the neighborhood and just like the most 90% of the people.
Yeah.
Not those kind of like soaring 1%ers.
Got it.
So when you made the transition over to credit, when was that?
I was
moment-
always doing credit.
Oh, so
Still.
when was the moment where you said, "I'm going full force into credit. This is what I was born to do"?
I lasted with Wells Fargo maybe about 3 years when I realized that it was like just a corporate ladder, which it is like a corporation.
Yeah, of course.
And it wasn't for me, and I kind of like I kind of wanted to do a little bit more of an impact. I kind of like what happened in the past with a lot of clients that they were losing their homes through Merrill Lynch, that they were getting just tossed away because they were not good enough, and with Wells Fargo or institutional banks that they kind of like they're just all about their numbers,
Of course.
And
Of course.
at the end, they don't care if you have overdrawn accounts or not. You pay me. That's all they care about. They have no leeway, no forgiveness, no heart, and that.
on.
And that's I think what I wanted. I want to have heart, to care about most everyone, about every situation, and that's something that I think sets us apart from most companies. You send someone to us now. And after that happened, basically the shorts and whatnot, and loan mods, and everything basically started progressing. Everybody really needed help. And everybody was in a pickle of misinformation and distrust about any financial institutions that were granting loan modifications, short sales, any type of attorneys, fraudsters, you name it.
It was a challenging time for sure. I know we worked through it, and he wasn't born. He wasn't born during that time. While you and I were struggling over here, taking care of family and all that, Rod, obviously he was barely a baby, maybe, I don't know,
Well,
You were 2 years old, right?
I wasn't
Rod,
even feeling it.
Yeah. But as you're going through this, I mean, you mentioned that you do things from the heart. You saw all these people losing their homes, their credit just dwindling down. I'm sure there was a file there that impacted you that said, I'm going to go 100% and I'm going to start helping my community, my clients more so, because I notice Merrill Lynch, Wells Fargo, they're kind of putting things aside. I want to take more responsibility for it.
I was working for a private bank, Wells Fargo, and I had a client come in at the bank, and I saw him, and I remember him. He was one of the loans that I had issued back then in 2001, 2002. He lost everything. He looked at me with such anger, kind of like blaming me for all that had happened in his life. And I was completely ignorant at the moment, and I just kind of like issued loans that perhaps were not as beneficial to him as they could have been. And now that I had known all of this, and I kind of have amassed all this education and kind of like know-how, I reached out. I, from the heart, kind of like looked him in the eye and said, you know what, Joe? I know what happened. It was me. I'm sorry for what happened. And I think it's very important at any given level of business, be it salon, nail salon, or a car dealership, mortgage company, credit repair, whatever it is. It's always very important for you to step up to your errors.
Yeah.
If there's something that you messed up at any given time, it builds and it shows your character when you're able to step up to something that you did wrong. And I think that's something that we do too, even here to this day. If there's something that we missed or messed up, we step up.
So you're taking pride.
I take pride
You
to
take
what
pride.
we do. We know someone that cannot afford us for whatever reason. We help nonetheless.
That's excellent.
And we help them even though it's a file that perhaps we could have profited from. If I see the situation, because each situation is different, we talk to people. We get personal. They tell us like all their stories and everything. I want to know where you come from. Like you guys are asking me, I want to know where Brian, where Will, where everyone here is basically is coming from. Why do you need this? What happened?
There you go.
How do I get you out of here? And what can you do, you and I together in conjunction, to get you out of this rut? And the idea is to get you guys out of this rut as soon as possible. No nonsense. Not dragging my feet for like a year and a half, like those big old credit repair companies that basically charge you $100 a month until the end of time. We try to do that efficiently as soon as possible. The idea is not to clear 100% of the negatives. We don't get caught up with all the details, like trying to clean it up, polish it up. We try to get you lendable. We try to get you
I like that.
qualifiable as soon as possible. And it takes two to tango. So it's me and or the borrower, in this case for you guys. And we basically draw a roadmap to success to get you there, and each one is different. It varies from one to another.
And I love the way that you laid that out, because, you know, same in our industry, I feel that we've had the most success in helping others when we truly know their story, when we truly know their aches, when we truly know what's hurting them. Because now we're actually able to take all that information and provide them with a solution that's actually going to solve them, instead of trying to figure it out by not even asking, just saying, this is what you need, that's what you want, and this is what you're going to get. But maybe you didn't ask the right questions for you to really understand the pain points.
When was the last time that your banker at Wells Fargo, Chase, Bank of America asked you all these questions?
Never. They just say, that's what you want? Okay.
When did
that
they
one,
want to
yes,
get to know
okay.
you?
But,
Gimme.
But they're always asking for money.
They're offering a credit card for you. Hey, 20% off at the store.
Yeah.
But do they know who you are?
And you know, Rod, I'm going to go back to your story. That was very touching. I can tell you poured a lot of emotion into that. I could tell. I mean, you're talking about, this is almost 20 years ago, guys. You know, and for it to still have that residual feelings, it's pretty crazy. I mean, I was touched. You touched me right away the way you expressed it. And, you know, to your defense, because I was there during those times too, we were trained to sell the loans like that. We didn't know any better. Now, fast forward that we're experts in our field, obviously we're asking the right questions. So now I think you have a better chance of helping our clients scale to a different level, because now you've trained yourself. You've already learned from the experience past on the things not to do and what you should be paying attention. Absolutely. So I really appreciate that you shared that. It was very heartfelt. So to keep it simple, obviously our audience is going to be like a third grade level, and they're really wanting to say, hey, how do I clear my credit? There's got to be a lot of myths out there that they say, hey, pay your credit down below 50%, or, you know, close this account out. What are some of the things that you see, keeping it basic, that people should be doing now to prepare? Because obviously we're still in this economy right now, in our market, it's not the easiest right now, you know?
Yeah,
and I know we all feel it. So one thing we practice is prepare. right? Prepare for what's coming next. How do people best
absolutely.
prepare for that, Rod?
So it varies. That the answer would vary because it's very diverse in between each section of the market.
Yeah.
Be it a student or be it a father or being a single person or whatever you're trying to achieve.
Yeah.
And that's kind of like what you learn basically as you're talking to anyone. Each one basically depends on your goal. The answer of preparedness will vary.
Yeah.
But generically, if you were to kind of like put it with Crayola's 1, 2, 3,
Yeah.
primary colors,
I like that.
would definitely be one step. If you're already kind of like with messed up credit, the step number 1 would be assess your income.
Okay.
You know, assess how much is coming in
Nice.
to know what you can afford.
Yeah.
If you see yourself that you're basically paying 50, 60, 100,000. Well, the majority right now that we see is kind of like from $30,000 to $50,000 worth of credit cards and consumer debt. is just
Wow.
going
So
up,
that's
like,
that's what you see on average, 30 to 50,000 of consumer debt.
and it's going up.
Yeah,
recently.
you know, funny, we just talked about this in one of our podcasts. If you guys don't follow, please follow, right? But we talked about this. Right now, we have the highest debt in history, consumer debt.
We hit a tree.
So I'm glad that you touched on that. So the average you're seeing right now is 30 to 50,000 in just credit cards.
Absolutely. Well, right now, if we were to speak about recent immediate moments, what we know that as of a year and a half ago, kind of like the market itself for mortgages has kind of like dwindled down.
Yeah, of
kind
course.
Like come to a kind of like a stagnant kind of like movement. It's not kind of like as volatile as, or basically as explosive as it was before.
Yeah.
We basically, it affected us as well because a lot of our clients were clients that were willing to, or wanting to basically buy a home that they cannot now not afford. A lot of our clients now that are coming to us, and the way that we try to educate them in preparedness is to let them know, I know that basically you may have a situation that where you can't seem or fathom that you can basically afford this home, but what you need to do, again, stick to the basics. Get rid of the debt. And prepare by getting rid of the debt. If you can immediately pay it because of the income is not sufficient, then either seek out some professional help, which could be us, call us, you know.
Yeah, please.
But we're not the only solution.
Yeah.
Some people just don't want to go through it through credit repair. Some people like to set out payment plans, which could be like debt consolidation companies, you know, but those companies take longer, like 3 to 5 years plans, you know, about monthly payments. Bankruptcies depends because it sets you back in your ability to buy a home. Depends on the guidelines of each bank.
Yeah.
Sometimes some banks don't want you to have any bankruptcies for at least 3 years or more. Depends on the situation. Some are more flexible at these times than others. But the beautiful part is always reach out for help. Don't try to basically eat the whole cake of $50,000 and basically see a bleak future for yourself where you see no outlets.
Yeah.
And what that triggers at that point, if you don't seek out that help, and the help is out there, just look at, we're here. You know, Will, Brian, us. I see a lot of like stress, you know, depression, divorces. And more explicit things that basically are very sad.
Yeah.
And I think it triggers like vices, mental health, everything.
Of course, it triggers into
just
all
horrible.
of that.
It's a horrible situation where most Americans I think are placed right now. And the worst part is that if you're a family member, father, mother, whatnot, you don't know how to teach your kids to not face these challenges in the future.
Yeah.
And I think it's very important that
that's a great point.
That education, I think, is the way to not just you as an individual, but America as a whole can get moving forward.
That's great. So if you had to educate your son right now, what would be the first thing that you tell him?
We do. I have I'm a father now.
And congratulations.
A father of 3 now.
Nice. There you go.
Yeah, so I think my daughter, she's 14 now, was the first individual that completely changed my life, obviously.
Nice.
Aside from my obvious wife. But and I think everything that we do, and I as Credit Corner and everything that we do now, Will, anyone that is a parent, you want it to be a reflection of your character to be basically something that they're proud of.
Got it. So what do you tell your daughter right now? Hey,
right now,
if she's gonna start her credit, what's the first advice you give her?
She's smarter in business than I think she was. Right now, recently, I try to basically talk to her about ways to basically make businesses. Right.
Perfect.
I think I try to instill the business mindset into her. Her being kind of like a money needy.
Okay, good. For instance, don't buy a car yet. Buy a first.
The most recent story that I have of her is she saw a way to weave a chunky yarn blanket.
Okay.
And she made it for a niece that was but the niece basically completely grabbed it, tossed it, didn't care much about it, and she made her own. I was like, you know what? Why don't you make it a business? It was it's summer. It was like 100-degree weather and whatnot. Yeah. Like, no matters. It cost her like X amount of money. Her profit margin was going to be like $40, or
okay.
If she sold them at $100. They're expensive blankets if you think about it. Who wants to buy a blanket for $100 when you can buy them on Amazon for $20? Got it.
I
was like, you know who's going to buy it? Grandpa,
okay,
grandma, your uncle, your cousin.
The right target audience.
Yeah, the right target audience. Basically, give him a smile. And so anyway, so I kind of like told her how to market it to the family, how to produce it, how to source her supplies and whatnot. And at the end of it all, I think, well, it's a whole story.
Yeah.
Right now, it took her 6 months to finalize everything. At the end, she learned that she didn't have to weave the blankets herself, but we got someone to weave them for her for a cost too. And now she's outsourcing all of her, delegating all of the processes. And
so are you teaching her how to go get a loan now for that, so she can get more yarn and she's able to do that?
Yeah.
Especially because
and that's exactly what I told her. When you turn 18 and you're able to basically, now that I'm establishing credit for her through authorized user accounts.
There you go. So that's where I think a lot of people would like to know, right? Yeah. And I like to use actually one of my stories for my kids. I actually have 5 boys. And since my oldest one's 31 years old right now, I can't believe I'm saying that. I just gave out my age. But anyhow, one of the things I saw it on Susan Orman, and she said, add your children as a joint account user or authorized user, one of those, so they could have started establishing credit. So by the time Gian was 16 years old, I added him to one of my cards.
Absolutely.
Actually, I added him to two cards. And I knew that there's going to be a point in time where he's going to be, Dad, pulling me like, I need you to co-sign. And one thing, Rod, I don't believe in, I'll tell everybody, I don't lend credit.
Don't co-sign for your kids.
There you go.
I've seen it one time and 1,000 times again.
So that does work then, right?
Yeah,
it does.
Don't co-sign for your kids. Build credit for them now, so that when they turn 18, they can do their own moves. They can basically get their own home at 18. They have credit established. Maybe they will need a co-signer because of their age, but if you basically have them working from an early age, and it's good to instill some working habits.
Yeah, of course.
For teenagers, so that they know what it takes to earn the money and spend it. I think that's a very important kind of like experience that you can give your kids.
So adding them to credit cards, Rod.
Yeah, absolutely.
Would you agree that that's a first thing people should do?
As you fix your credit yourself and you establish it, make sure that you add one of your kids.
And what kind of credit cards would you say would be ideal? Like you mentioned, you add.
Stay away from store credit cards.
Okay.
Store credit cards are kind of okay, but they are non-essential, not necessary. You can build an 800 FICO without any store credit cards. An 800 FICO score. Let me repeat that.
Nice, 800.
Without any store credit cards. You only need about maybe 5 regular bank institutional credit cards. Yeah. And every 6 months or so, ask for credit limit increases. Make sure that your balances
every 6 months
revolve. And they don't have, with your balances that you let revolve every month, do not exceed 6% of the total credit limit, and that's going to be it's kind of like a strategy. It's a discipline to yourself. Immediately as you build higher credit limits, it's kind of like a nuisance because you have to constantly pay the accounts like on a weekly basis. But it doesn't take much. Wow. All you have to do is log in into your app and do the transfer.
It's that easy now.
15, 20 seconds. Now you don't have to go to any branches to pay Capital One.
Right.
They'll take your money. For payments,
I'm glad that you brought the 800 credit score, right? How important is that for the people to know? Can you give us an idea, like the tiers, right? Like I know in our lending industry we have tiers. What would you say is low credit, mid credit, high credit?
I think that tier will fluctuate depending on the market. And right now, if you're talking mortgages per se, right now you see, and you may be more versed in this than I am, because I mean you're touching the veins of that market. But I think from what I've seen on the loan officers and offices that ask me for their basically clients to be turned
Yeah.
over to them, they can lend people a home from 580s and up.
Correct.
Right now.
You can.
Yeah, you can now.
Yeah.
I mean, it's not going to be the prettiest of the FICO scores, but it's
And that's what we're talking about, right? Like, is that considered credit,
I
good
think
credit?
anything below 580 or so is is already bad, and
Yeah.
and no one's going to lend you a pencil below that.
Gotcha. Okay.
Bottom line.
Yeah.
So if you're below 580 right now, there's something that you got to do. It's probably not, if it's not credit repair, there's got to be some strategies that you or money placement where you can basically do
Yeah.
on your credit, on your finances, to bring yourself above that threshold.
Yeah.
Where you can, if you're looking to buy a home, basically get above that 580, and that would be kind of like the starting point. I think for most lending offices, and it varies again because it fluctuates from one bank to the other, I think you see a 640, 660, 680 as being the next threshold.
There you go.
That 100-point difference now gives you, I think, discounts on your rate.
Correct.
And that's basically something that most Americans are kind of like seeing themselves into right now. And they don't call me when they're in that
Yeah.
when they have like a 680 or something,
Yeah.
because that's sufficient enough for them. But then it comes a different tier, a higher tier, when you're basically looking for jumbo loans or whatnot, or commercial lending, where they ask you that if you basically want the best rate for a couple $1 million loans, then you need a 720 plus.
There you go. See, so you're still doing lending.
No, I'm experienced on it. So when you can speak the lingo and understand the language, and I think you understand your target market and your clients and the people that are referring people to you, and what the person, the individual needs to get there, so that you can refer them out.
Yeah, we do have tiers. It starts from the 580 obviously to 600, 619, 620, 639. There's thresholds of what interest rate you're going to get, and obviously the higher the interest rate, the more favorable terms you're going to receive, whether it is to buy a vehicle, it's to buy a mortgage, it's applying for a personal loan. It really helps, you know.
Insurance bonds, you name it, commercial, I mean, medical lending, anything. There's like 49 different financial diverse FICO scores, each one scoring each financial sector. And I think there's this company called myfico. I think it's myfico.com. That when you scroll down with your application or with your profile, at the very bottom it gives you like 20 different institutions with 20 different FICO scores for each kind of like industry.
Wow. Okay. So each industry is different. What you're saying is
so some person basically say, hey, you know what's my FICO score? Well.
It
varies. Depends on what you're trying to get.
That makes sense.
Because if you want a credit card, I mean, it'll be something. If you want a mortgage, the mortgage companies will weigh heavier on your history with mortgage history.
Yeah.
Vehicles and car sales, what they're going to do is they're going to weigh you differently if you have late payments on your vehicle. Whereas if they don't care as much if you had like a credit card or a mortgage late, but if you had a vehicle repossession, they'll frown at you. But yeah, absolutely is important to basically note that it's very easy. For if you find yourself, I saw just a couple of clients this morning that they were like a 360 FICO score, like a bottom of the barrel. Kind of
wow, 360? Have you ever seen that, Brian?
Never.
Yeah. I've never seen that. I've seen the lowest, I want to say, is like 450. So now that we're touching on that, I mean, I think this is something you and I are going to be very interested in. But if we see somebody, let's say they're 580, I'm sure you probably received that, a client that comes in with the 580.
Today.
And there you go today. So that person today, if they follow the instructions, they truly become, a team member. Like you said earlier, it takes two.
Yeah.
Right?
Absolutely.
It takes you giving them the advice, them receiving that advice and following that advice, right? Following through. Let's say they follow all that through. How long will it take them to get, what's their goal? What type of credit score?
In average, if everything basically pans out, and basically by mean everything is like they put the importance and the work to get these things done, we can get them done within 90 days.
90 days.
And
we're talking 90 days to get to what?
I'm being conservative right now because
I like conservative.
That's something that I like to pride myself on, that we basically like to under-promise.
Okay.
So I've seen things turn around in weeks or days. But it varies. It's basically a lot of it is out of our control when we basically dispute things out, or basically try to challenge accounts or settle accounts with lawsuits or big ticket items. But if we have your corporation working with us, we're providing us the documents that we need, which is the most basic stuff, just like IDs and documents that I need to package a proper dispute to the right people. We call their legal department. We directly go directly to the person that needs to be spoken to, not only the credit agencies, but we speak to the companies themselves and reach to them directly. And we send information, the pertinent information that's going to be most efficiently processed by them to get the outcome that we desire. I could say, if I were not trying to be conservative, that within 45, 60 days.
Wow, that's pretty cool.
We could get things done. And I get those clients. I have a bunch of lenders that reach out to me. Hey, I'm in escrow right now. You got 30 days to get this done. I'm like,
here we go.
You couldn't have called me when you were prospecting. You had to call me when you were in escrow.
The challenge is on.
Yeah, and we follow through when we come through.
Nice.
So it's something that is very doable, but it takes two to tango.
No, of course. So I'm a millennial, and I'm always on social media, and I've seen a lot of influencers bring up a lot of credit hacks. First question is, how do you feel about the stuff that they portray, and how easy they make it to be attainable?
There's a lot of
and then I have a follow-up question
of very optimistic, hopeful information out there.
I like
a lot of it is true. The most basic of things, if you wanted to speak about, manage your finances, like pay your debts first. There's a lot of good information, but there's also a lot of misinformation out there. I had a couple clients a couple weeks ago, reach out to me and say, hey, I saw this guy on TikTok. Hey, I saw this guy on Instagram. Hey, I saw these guys, blah, blah, blah. And there's a lot of people that are basically saying that they know the laws and there's a law that they quoted and they can basically challenge things that should not be there. In this case, it was, let me think about what it was. Nice. I think it should.
But still, 90 days. Jeez.
So I forgot what it was. But it was an individual that basically sent me the link to the TikTok. So that I could see what this individual was talking about.
Did you even have a TikTok account at this point in time? No,
I don't. I kind of like I'm seeing myself still kind of phasing out of that realm of technology.
Well, you got a lot of stuff going on.
Social media, I don't have the time.
Yeah.
But so there's a lot of misinformation out there, and you gotta beware because as with everything in social media, not only with credit, with any topic. There's a lot of kind of like bait and switch, kind of like techniques to sell stuff or to basically get people involved in services.
And that's what I wanted to ask. Like the one that I see all the time, and hopefully you could debunk it, is do this to get business funding over $100,000. First thing you do, and I'm being like, I always see like, this is how you get $250,000 by doing this. First thing, open up this account, then file for S Corp, then go to your bank and get an EIN. So what is the actual way?
I love that.
To truly get business funding, because they online
his daughter's gonna need it for doing the blanket. She's gonna need it.
And when I saw that question popped in my mind, I'm like, business funding.
There you go. Send them the TikTok video.
So for business funding, the most important thing is one. And it goes through the basics again. Take care of yourself first. No business, no bank, nobody is gonna lend you a pencil if you have crappy credit.
Yeah,
So take yourself above 680 first, and that's the very minimum for business funding. I think they want you at 720 plus for most business lending. Once you get there, you will need to establish an entity because it's a business,
Yeah, exactly. LLC, S Corp.
If you go through it through like a sole prop or whatnot, they're only gonna basically steer you towards SBA loans, and they vary from like 40 to 150, something like that. And it's just it doesn't go up anything above that. And even if as an S corp, if you basically are trying to obtain 150, they're going to ask for profit and loss statements.
Yeah.
And if you don't have basically any experience or profit and loss statements or any taxes for your business from the past showing profit, which most people don't like to show profits in their businesses, then you're not going to get anything.
Yeah.
And a corporation or LLC is something that you will definitely need. Take care of yourself first, because you will be, as a new entity, have to be the guarantor of that loan.
So essentially, you're going to be the co-signer for your business.
Correct. In case of a default, that collection will show in your personal credit report.
Makes sense.
Yeah.
And one of the things that I like that you actually shed light on is that if you're going to get business funding, well, you better have a business running already.
Yeah, absolutely.
And the profit and
take
loss
care of
is going to
yourself,
make
yeah.
sure that, you have that business running,
Yeah.
and it's going to let the banks know that, the risk.
It's not so easy as to say that, you know what, let me up in the S Corp, the EIN, which
Thank
is
you.
super easy. It doesn't sound like it. It's just like you just go online and get an EIN. It's free.
Yeah.
And magically, $250,000 plus $500 million are going to be bestowed on your lap
you still
for you
gotta
to
do
do
the work.
anything because you said a corporation, an EIN, and no business.
100,000. No,
Yeah.
you got to do the work.
Yeah, there's everything on paper, but your personal credit is, in the gutter. No one's going to let you anything.
Yeah.
Appreciate that.
I mean, we have so many questions right here. It's getting exciting. But one of the things you brought up this point of where we're at with consumer debt. Where do you see your business heading as we move forward?
It's scary to say that. Well, I think I'm going to be doing really well soon.
Okay, I like that
because sadly, and now this is the sad part. It's scary to say because a lot of people are basically relying on personal, debt.
Yeah.
To just live.
Correct.
To get through with life. I mean, right now, just to pay the bills, inflation, especially we're located here in San Diego, the most expensive city in the country, apparently now. I mean, you can't blame it. A lot of our clients that are coming in right now are coming in with bottom of the barrel credit cards that get completely maxed out just because they needed to buy eggs, milk, the groceries
Okay,
and
so
whatnot.
that's what they're using now.
It's harsh. And they come every now and then just say, you know what, I'm already again up to the limit with $20,000-$30,000 of debt.
Yeah.
And I can't move forward.
Wow. So this is the case that you used earlier, right? You mentioned that lenders come to you, they're in escrow, they're closing in 30 days. Rod, can you help me fix my credit, my client's credit, right?
Yeah.
So now you're having the other side of it where consumers are waiting at the last minute to come. And now, how can you help me, with this debt or consolidation?
Well,
it sounds like you're not a fan of consolidation.
It depends. I think I'm a fan of each individual, as anybody is, doing what they feel comfortable doing.
Yeah.
If you feel comfortable basically setting payment plans for accounts that you basically, want to pay in 5 years or 6 years, and basically put off your goals and wishes and dreams for a little longer until you yourself basically come through with all your payments, that's fine. I mean, there's something for everyone. If you want to get a third job, fourth job,
of course,
and a gazillion side hustles to come up with the money and pay it up in full, that's up to you too.
I think that's what we're doing, right? We're finding 2-3 jobs. It's funny that even the youngins are actually saying that.
Absolutely.
That's true, very true.
But I do see a little hope now with the rates coming down. I mean, there's going to be like it's already happening. A lot of people are getting, excited that there's now opportunities that it's a little cheaper now to borrow, for almost 2 points.
Yeah.
Which is awesome. And
so he is doing loans.
Alhamdulillah.
No. I just know because I try to basically.
It's because I just priced one out the other day.
No, I can't. I'm glad. It just sounds right that you take.
I have it on my phone, the 30-year fixed.
Yeah.
Like how
Nice.
it basically dwindles, and I saw it at 8% not so long ago.
And you closed it and never opened up it again.
You know what I like
That was
about
like a 6.5, I think.
what I like about what you do, Rod. It sounds like you're passionate. You're really here to be a resource to not only to your partners, which happens to be your clients that come in, but also the lenders that you're working with. And you knowing this stuff, I'm being sarcastically saying it because I'm actually admire you for doing that and for stepping in our shoes and wanting to help the consumer even that much more. So knowing this information allows you to be, how can I say, you're a lot more dangerous, right? Because you're able to give them better information and point them in a better direction. So I can appreciate that. We've used you many times and we've seen the success that you've done.
Yeah.
My only thing is I know I've known you for, I'm going to say at least 8 years. It's got to be.
A little while now.
How long has it been?
More.
Yeah, probably more. How long has it been since you've been in the industry? Like, this is it. It was just credit repair and this is what I'm doing.
Well, I started doing credit repair in early 2000s.
Okay.
When I was still doing loans back then, because I started doing that. But I think Credit Corner as an entity itself was born because we were basically subsidized, basically working under a law firm back then, and basically there was no other business to us through the short sale and whatnot process.
Yeah.
And I think 2010,
Okay.
2011.
So 13 years. Congratulations.
With the Entity Credit Corner itself.
And I mean, you shared that beautiful story, you know. I'm going to go back to that one, Brian. How have you seen that person again or?
Not anymore.
Okay.
But I feel great that I was able to step up, fix him with their credit.
That's awesome.
Fix him with everything and basically turn that bad experience after years of basically him holding that grudge to something that I can bump into right now and say like, hey.
Yeah, let's hug it out.
Yeah,
I mean,
absolutely.
there's a lot of great information. Would you agree, Brian?
Tons of nuggets.
Yeah, and I think we really need to have you.
More than anything, I think something that I realized too in the recent years now, last 2 years, is that a lot of people in the industry have just hung the towel, thrown in the towel, and quit. Because it's not easy, it's difficult. They don't have a book of business or whatever, or the experience or whatnot. And there's a new blood being pumped into the industry as loan officers and realtors and such. And as long as I've been doing this for credit exclusively now, the Bryans of the world didn't know about me.
Yeah.
You know, and there's now a plethora of them out there. And it's my job, and that's our goal right now for the next months and years to come, to get out there again. And this is why I'm here too.
Nice.
So that Will, thank you for the introduction, and Brian too. But not just through these processes, but me going to the realtor's offices and the broker's offices, and letting them know what we did in the beginning when we started Credit Corner, which is just knock on doors and say, hey Brian, hey Will, it's me, Credit Corner. My name is Rod. And it's like, oh, wow, like, are you?
Correct,
like, yeah. Here's my card. And what do you do? Credit. I don't want everything. Just send me one.
Yeah.
Send me one.
Yeah.
The worst one that you have. The one that you can't do. The one that you couldn't help. That one that was kind of like the hopeless case.
Yeah.
Send it over.
Well, that's what I call a community leader.
Give me that one. Let me see what I can do.
Yeah.
And let me turn it over so that we can get something going. And from then on, I will basically speak to all your crew and all your loan officers, and we'll get relationships going.
No, that's awesome. That's a community leader right there.
Key.
That's when you know you care. You know, you want to make sure that these people that do have that dream of home ownership, you're helping to make it possible.
Yep.
Or some people want to buy just that car, that vehicle, and they don't have challenge credit, and they want to be. You're creating that dream for them. And if we're not being vocal, well, how do we help people if we're not vocal?
Exactly. No, I'm talking about vehicles that somebody wanted to buy. I mean, I had a situation of a guy that basically had a terrible credit. He had the money, he has the income coming in, but he didn't know how to fix his stuff.
Yeah.
So he went on and bought. He wanted a Raptor, which he couldn't afford. So he bought like an F-150, kind of like all tricked out. 2023. He's paying $3,000 a month for an SUV, for a F-150. F-150. He's not even a Raptor.
Yeah. Well, give me his name.
A $60,000 loan, basically, that he wanted. Well,
because
he
of
was
credit.
referred to us by another office, so we quickly referred him back to.
Wow, that's crazy.
But they have the money, and they're paying preposterous amounts of money for services and or items that they could be paying a fraction of the cost.
And that's the importance of credit.
And they just didn't know.
You know, Rod, we would love to have you here longer, but obviously we're trying to make these drive time. So, you know, as we close up here, is there anything you felt we didn't ask you that you probably want to share?
I want to share. I think if anything that anybody, if they hear right now, they can take of substance. A relief is that there's a light at the end of the tunnel.
I like that.
If you feel yourself in complete darkness and with no way out, always reach out. If not to us, there's professionals out there that are willing to help. Don't basically rely on your lack of knowledge on trying to do something and take it out on the world. You know.
Yeah. Or on yourself.
Or on yourself, absolutely. There's people that want to help, and we're willing to do it. If you don't have the funds, we're willing to do it anyways. Because, believe me or not, we've done more than our share of free files, and those free files have turned into word of mouth.
Awesome.
and they've come back tenfold to us.
So for those people that do want to reach out to you and they want to connect and they need that help, they don't know where to go, they're silently stressing, where do they reach you at? What's your email, your number?
Look us up, Credit Corner on Google. I mean, we're there. I mean,
Perfect,
we're one of the top. I mean, I think I didn't know much about social media, but I mean, as time basically came through, clients are very kind of like adamant about leaving good reviews on about credit repair companies because they don't want their name out there knowing that they had bad credit.
Right. Oh yeah, I never thought about that.
Yeah,
that's a great point.
Nobody wants to. I don't want ever to know that I was there. I went through those things. But the few that did built a very good 5-star review, kind of like history for us. More than 250 reviews now of 5-star reviews.
That's awesome.
People that we've been able to help, and through that basically that vehicle. Now I have a lot of people that just basically look in credit repair, and Credit Corner pops up as one of the top ones. And we didn't advertise; it's all organic, and that's all pride.
That's all that's all we can do, man. I applaud you for that. I applaud you for
Rod,
your success.
Thank you so much for your time.
For having me here.
Thank you so much for stopping by. Thank you so much for sharing your story, your insights, your knowledge, and just coming and chatting it up with the boys on a Friday.
Yeah, exactly. And again, if you don't mind, we love to have more details.
Yeah,
Maybe
definitely.
other stories are going to start coming up. Things will be changing.
I'll be happy to come back. If you guys
and
want.
if there's any information that come up that you think like, hey, during the week, hey, this is something maybe your clients need or your clients might be, inside for, please send it our way.
Yeah.
That way we're here. Now you're part of the Mortgage Heroes family, and it's here. It's our duty to take care of our community.
Absolutely. Use me as a tool. I'm willing to help.
And like you said, it takes two to tango, and we have a huge community, so let's team up.
That's it.
Absolutely.
Thank you,
guys.
everybody that's watching at home. Make sure you tune into the Friends of Mortgage Heroes podcast, and stay tuned for the episode with Rod from Credit Corner.
Yeah.
Thank you, guys.
Thanks again, Rod, Brian. You guys are amazing. It was fun.
Thank you, guys. Bye.